Good morning. It's a pleasure to be here today with a panel discussion about the labor force and questions about what it means, problems measuring, et cetera, et cetera. I'm Dan Hamermesh. I'm editor-in-chief of the IZA World of Labor. And it's a pleasure to have with me Hie Joo Ahn, Board of Governors of the Federal Reserve of U.S., John Coglianese, also of the Board of Governors, and an acquaintance from way back of mine, Jason Faberman, who's at the Chicago Federal Reserve Bank. Folks, thanks for being with me this morning. Let me start off by asking a question about a very simple question. We measure the labor force participation rate. We also measure the employment to population ratio. And I ask you, if you're talking to the average person or the policymakers, which one of these do you want to focus on most importantly? Let's go around the room. Hie Joo?
Yes, it's Hie Joo. I think the employment to population ratio is a better indicator if we define the health of the labor market as whether the labor demand is strong enough to observe the supply of labor. The employment to population ratio is defined to be one minus unemployment rate multiplied by the labor force participation rate. So, the employment to population ratio has the information on both the unemployment rate and the participation rate. Empirically, on average through history, unemployment rate is found to be the most informative individual indicator of the state of the business cycle according to various empirical studies, and thus likely reflects the strength of labor demand, perhaps better than the labor force participation rate does. Nonetheless, let me mention this. The unemployment rate and the participation rate exhibit different cyclical dynamics, and the participation rate can capture the strength of labor demand perhaps better in a certain phase of the business cycle. So this is related to John's research. So in a mature expansion, when the unemployment rate stops declines further, the participation rates tends to improve further relative to its trend because it can capture the labor demand strong enough to pull the workers who are on the margin of the labor force and are less hireable than the average unemployed workers, into the labor force. Again, the employment to population ratio can capture, both the unemployment rate and the participation rate, and thus can also capture this, late cycle phenomena in the participation rate. So I think the employment and population ratio is a better indicator than the labor force participation rate is.
Thank you. Let me ask John, what do you think about this, since you mentioned your work?
Sure. So I think it depends a little bit on what you are looking to measure. So if you think of the economy as a production function, then employment or total labor input, or really total hours, but employment is the largest part of that, is what matters. When you're thinking about a business cycle, typically the unemployment rate is going to give you the best indicator of where we're at along a recession or recovery trajectory. But importantly, so the paper Hie Joo was talking about, which I'll be presenting at this IZA conference, shows that actually there's a late stage to most recoveries in which the unemployment rate has already recovered to its normal historical level, but there's still room to grow by pulling people in off of the sidelines of the labor force by increasing the labor force participation rate. And so it's important to keep that in mind, that unemployment can give you a very good guide for most of a recession recovery dynamic. But that last stage is really crucial to incorporate the labor force participation margin. And so that's where looking at a total measure like employment can give you the right guide by keeping track of both unemployment and changes in labor force participation.
Let me ask you, since you mentioned, where are we now in that process?
So at the moment, it's a little bit difficult to say because the labor force participation is depressed. The unemployment rate is still quite high. We expect both of those to continue to improve as the economy recovers from the COVID recession. I think a big open question at the moment is how much and how quickly we're going to see labor force participation recover. There are some unusual dynamics to the current episode that haven't taken place in other episodes, particularly with people needing to be home to take care of kids who can't go to school because schools are shut down. There are lots of people who are worried about catching COVID and are hesitant to search for work or to work. Those dynamics we haven't seen in any previous recession. And so maybe those will improve rapidly as vaccinations go out, as conditions return to normal, or maybe those will take longer to recover, like we've seen shortfalls in labor force participation take longer to recover in past recessions.
Okay, Jason, a few thoughts on that, and then we'll move on to another question.
Yeah, I mean, I guess I'll just synthesize what Hie Joo and John have been saying in a little different way in terms of thinking about kind of short-run business cycle dynamics, like what we care about now during the pandemic. I agree that the employment population ratio gives us a lot of the information we need in terms of labor demand and where we are in terms of bringing people back to work. But in terms of the labor force participation rate by itself, that also has some useful information when we think about more longer run trends, structural issues in the labor market related to women's labor force participation of various underrepresented groups, older workers, the retirement of the baby boomers, and with respect to the pandemic, we've seen in the short run at least in some of the research I'll also be presenting during this conference. A lot of changes in labor force participation of both men and women, particularly older men that may be concerned about the virus, also maybe accelerating other trends we've seen in terms of earlier retirements of older male workers, but also women juggling between childcare issues, added childcare burdens because of the pandemic, and having to work. So in some sense, it depends on kind of the horizon you're looking at, which measure is more important. But I agree, kind of for the shorter run cyclical stuff, the employment population ratio tells us quite a bit. But for some of the longer run issues we care about, the labor force participation rate is pretty informative.
That's very helpful. Let me go on since you mentioned it. When I studied economics in the 60s, we thought that the labor force participation rate in the U.S. was fixed at 59%. And yet from 1950 to 2000, it grew up to 67%. That's a huge increase. And I and others thought that from 2000 on, it would stay roughly constant or maybe even rise a little bit. And yet in 2019, the participation rate in the U.S. had fallen from 67 to 63% at a time of more than full employment. And at the bottom of the COVID crisis last April, it was 61%. And it really hasn't increased much since the bottom of the COVID crisis. So my question is, let me start with Jason, does this drop, which occurred from full employment to full employment, represent a change in people's attitudes? So people are basically not as concerned about working and can live off the fat of the land more. Is there something else perhaps going on? This is not a COVID question.
Yeah, so I don't know if it's living off the fat of the land or some of it's the retirement of the baby boomers. Some of it's purely demographics. And they started in mass around 2012, and that's where we see kind of these longer run trends in decline in labor force participation. Some of it also is some behavioral changes that don't seem to have anything to do with financial incentives. So I'm thinking of some of the research by Angus Deaton and Ann Case, where they've looked at these deaths of despair and how they have economic consequences. One of the places we see those consequences is this earlier retirement of older male workers. Some of that is related to policy. There's been some research on disability insurance, perhaps providing incentives for these earlier retirements. But I guess the short answer, there seems to be quite a few different things going on, particularly among older workers, older male workers, that's been driving some of that decline. And like I said, the pandemic might actually be accelerating some of that.
Okay, as an older male worker, I guess I'm not doing my share in reducing labor force.
You're offsetting some, yeah.
I'm just a little bit. John, any thoughts on this question?
Sure. I think you can tell the story of sort of the last half century of the labor force participation rate by looking at what's happened for prime age women. So from 1950 or 1970 through 2000, labor force participation rate for women between the ages of 25 and 54 grew rapidly, and that provided a huge boost to labor force participation in aggregate. And then since 2000, that increase has stopped, and for some of the early 2000s actually abated. And I think that drives a lot of the overall story. Then additionally, there are some demographic pieces with the aging of the baby boom population that layer on top of that. But that's a story in which there was this rapid entry of women into the workforce that's since stalled out. And I think one of the things you can point to that may be driving that are policy choices, particularly in the US, the lack of strong policies for paid leave or childcare. If you compare the US to other countries like Canada and North America, or other countries in Europe that have advanced much more on those types of policies, you've seen increases in female labor force participation that have continued after 2000 in those countries. And that suggests that there's still perhaps room to grow in the US, but it depends on the policy choices that are made.
Okay, let me ask you, Hie Joo, anything to add on these things, or we'll move to the next question?
So I would like to, mention, slight, different aspects of the, phenomena that is captured by the data. So I would like to, bring up the measurement issues and, how this measurement issues has affected the trend in the, participation rate. So I'd like to mention two things. One is the missing, non-response rates, and another one is the rotation group bias. And, it's been well known that, the non-response rate or the incidence of missing, survey respondents, has increased over time. So there has been the uptrend in, non-response rates. And if these missing individuals are random, then we don't need to worry about, how much, this, bias could affect the, measured participation rate or unemployment rate. But, according to some research, these missing individuals are not random. They are more likely to be unemployed, and they're more likely to be people in the, labor force. So that means that, this increased trend in non-response rate might have, biased in the participation rate and might have created some spurious downtrend in the participation rate. So I'd like to attribute some of the the downtrend in the participation rate as coming from the measurement issues. And another thing that I'd like to mention is the rotation group bias. So rotation group bias means that in a given month, the survey, the CPS surveys 8 separate samples called rotation groups. So these 8 groups are staggered so that in a particular month, some people are being, interviewed for the first time, others are interviewed for the second time, and so on, for a maximum of 8 interviews. If each rotation group is a random sample from the population, then the participation rate should be the same across different rotation groups. But in practice, they are not. The participation rate decreases, with an increase of survey times. So, according to some research, this rotation group bias in the participation rate takes place because, some job losers, especially unemployed individuals, have more incentive to report they are retired or disabled, the more times they are surveyed. It's because of the, perhaps perceived shame or the stigma attached to the reporting, like unsuccessful job search to government agencies. So, this, type of bias might have created, the decline in the participation rate. So then, the real question is how it is related to the decline in the trend of the participation rate. So if the sample, if a certain group of people who feel more scarred, from reporting, unemployment to the government agency, and especially prime age, male, if there are, more increased joblessness in this specific, group who feel more scarred, from reporting joblessness, then this phenomenon can also create, some downtrend in the measured participation rate as well.
Thank you. Let me move on, since John mentioned Europe, and we are the world of labor, not just the American world of labor. I like John's line very much about the importance of policy, since we are economists and think about policy. And it is the case that policies in Canada, and especially in most of Western Europe, not the UK so much, are very much more stimulatory toward females, married mothers in particular, unmarried mothers working. And yet that's been true always, at least for the last 40 years in the EU. And I don't see how they can, because of policy change, have continued to grow the female labor force, or at least not have it drop. I don't see the change, or in economist terms, the double difference that would drive the changing differential trends in female unemployment and female labor force in the US and the EU. So how would you respond to that, John? I'm giving you trouble, I realize that.
So I think it's a great question, and I think it's something that a lot of people are still looking at to try and understand why there could be these big differences in the trends across different countries. To some extent, there may have been policies that were more supportive in Europe always, but the impact of those policies may have grown over time. In particular, there's this secular trend in a lot of advanced economies of women entering the workforce that's been driven by a number of factors. That raises the importance of these policies, or sort of there may be an interaction effect between underlying norms about female participation and the extent of these policies. And so as female participation in most countries has increased, these policies, or really the lack of these policies in the US, has become a bit more of a barrier to further increases. So that's a little speculative, but that could be one reason why you don't see the double difference, as you put it.
Okay, speculative is what I want. Jason, any thoughts on this? And then we'll finish up with Hie Joo with a few thoughts.
Yeah, so I was looking at the European labor force participation recently because I obviously don't keep track of as much as I do the U.S. one, but there's a couple things that have been different over both the longer run and the shorter run between the U.S. and in the EU region. Number one is that traditionally Europe has had a much more regulated labor market in a way that's protective of the workers. And one of the consequences of that is it's been a little less flexible and a little bit more sluggish, which has been both good and bad. Bad because, a sluggish economy is harder to match workers to firms and get people employed. But it turns out if you look at the pandemic, actually, it's helpful because it's meant to protect workers, and we haven't seen nearly as big a drop in participation in Europe as we've seen in the U.S. The other thing I think that drives kind of the differences in trends is that, the EU is a relatively new concept in terms of, 20, 30 years, whatever. And the regional economies are still integrating with each other. And that takes time. And as a result, you have that underlying trend of integrated economies, people migrating across countries and so on, offsetting some of these other demographic trends we're seeing both in the US and Europe, because in the US, you obviously don't have that integration going on. So I think some of the regulation and integration patterns you see in Europe that you don't see in the US are driving some of the differences.
Interesting. Hie Joo, do you want to add a few things, if anything, on this?
Yes. Again, I'm not an expert of, the participation rate of Euro area, but, based on, some of my readings on the participation issues in the Euro area, so I see, there, as John and Jason mentioned, that there is a two, big difference between the U.S. participation rate and the European participation. The one is the, prime age, female participation rate. The U.S. female, prime age female participation rate, shows some, downtrend, and although it picked up, in the past years, but in the European, in the Euro area, the prime age female participation rate continued to grow, continue to show the uptrend. Then the question is, what really drives the difference between the two? So, as John mentioned, that policy changes, policy differences, one factor. According to some papers, the labor market reform, that happened in the past decades in the Euro area, explains a substantial chunk of the increase in the female participation rate, especially, young women and highly educated women. So I think there is some, difference in policy. And also at the same time, perhaps more fundamentally, who bears the, burden of the child care and the elderly care? That's important, factor that can affect the the female participation rate. So I think so in terms of culture, there can be difference that determines the cost of participating to the labor force of women. And also, some research suggests that, the increased, participation in the euro area, the participation rate of the older workers also increased over time. And, some research suggests that it's also related to the reform of the retirement and the pension plans. So I think, that aspect is also, critical in explaining the difference between, in thinking about the, difference in the participation rate between US and euro area.
Let me finish up by just asking a yes/no question to each of you. Just one word answer. Let me make a statement. And it comes from a fight I got into probably 20 years ago with a leading Nobel Prize winning macroeconomist whose name will not be mentioned here. He was going on and on about high labor taxes in the EU, causing them to have no work going on and having low participation, whereas the free US market has much lower taxes on labor, and he argued would have higher participation and higher employment. In fact, today it is exactly the opposite. Does that suggest to you that the notion of labor taxes not driving these differences is not correct? Jason, yes or no? Am I right, or is Ed Prescott right?
It's not. It may be other things, but I don't think it's taxes.
Okay, thank you. John?
I agree.
Right, or Prescott?
I think you are right in this case that the differences cannot solely be attributed to taxes.
Okay, Hie Joo, yes or no?
Same here. I agree with you. But, I'll probably, perhaps, able to provide a more accurate answer if I do research on that, empirically. Given more data in the past decades.
Okay, we'll finish up with the usual economist line, more research is needed, which is certainly the case, in this case more than most. Anyway, let me thank you all again, Hie Joo Ahn, John Coglianese, and Jason Faberman for joining me this morning. And let me finish up by noting they are participating in an IZA conference worldwide on measuring labor. And I wish you all luck in the conference. Thanks for being here with me.
Okay, thank you.
Thanks.